Hello folks, you are watching Finsight on YouTube and this is our new series called Unboxing Companies. So the mission of this series, Unboxing Companies, is to unbox all of these corporates and let every common man understand what they do, what is their business model and what are their growth prospects from investing point of view. Sit back and relax because this is going to be a very comprehensive business analysis for each and every company that we unbox in this series. And without much ado, let's get started. Now, before I dive into our first company's comprehensive analysis, I would like you to introduce with a concept of investing called thematic investing. So in thematic investing, what an investor does is he identifies key trends that are going to shape across the globe, across different geographies and diverse set of cultures. And with this change, it also changes the consumer behavior. The spending patterns also changes and it impacts all companies in a particular industry. Giants get dethroned, new companies emerge. Behind this key trend change as well as change in consumer behavior lies a story, a powerful story. And here is what Mr. Tyrion Lannister has to say about stories. He was my favorite character from Game of Thrones. Let's have a look at it.
What unites people? Armies, gold, flags, stories. There's nothing in the world more powerful than a good story. Nothing can stop it. No enemy can defeat it.
Yes, stories are indeed so powerful that it unites people and it also attracts loads and loads of investor money. In technical term, we call it a value migration. In this video, we are going to cover one such a powerful story. This story belongs to mobility industry. And please note, I am talking about on-road mobility here, not through air or through waters. All the vehicles that you often see, including passenger cars, scooters and bikes, trucks and other commercial vehicles. This is what Chairman of KPIT, Mr. Ravi Pandit, mentioned about this mobility disruption in year 2019. He believed that this industry is changing now more than it changed almost 100 odd years. Almost a century back in 1918, this industry had undergone a drastic change when Henry Ford introduced a model called Model T with a mechanized engine that was affordable for the masses. And 100 years later, in 2019, again a similar, actually a more powerful change has been brought in by Elon Musk by introducing Tesla's new generation cars. So now it's important to know what is changing this time. It is broadly around four major areas called CASE, C-A-S-E. C stands for connected. The car is no more an isolated entity. It is getting connected with the ground. It is getting connected with the vehicles in surrounding. It is getting connected obviously with a person who is driving it. These vehicles are getting smarter every passing day, and you would be surprised to know that these new generation vehicles will have 7 to 8 times of more code requirements than a standard Boeing 747. A stands for autonomous. The desire to get free from the mundane activity of driving a car is very, very high. Obviously, people want to utilize their time in better manner than driving through a congested traffic of urban cities. These are going to be self-driven cars with no driver's seat at all. Now the actual realization of this technology could be any time around, and obviously there are multiple levels of automation attached to it. But trust me, this change is going to be inevitable. S stands for share. You have already seen the rise of Olas and Ubers of the world. In the western part of the world, the share of personal ownership of a vehicle is already going down and the shared ownership is going up. What this means is The average utilization of a vehicle, which has been somewhere around between 15 to 20,000 kilometers, is going to go up to millions of kilometers per annum. And that's huge. This E is of course for electric, which holds a lofty promise of saving the world from climate change. People are already crazy behind electric vehicles like Tesla, and in addition to that, there are government incentives that are flowing in to promote the early adoption of electric vehicles. For example, US President Joe Biden has already committed to replace the government's entire vehicle fleet by the electric vehicles. In fact, the companies like General Motors have made an announcement to go 100% electric by end of this decade. Let's look at how market size is going to grow over the next few years. In 2015, the mobility industry size was worth $5.5 trillion, which is going to go up to $7.7 trillion by the year 2030. And what is more interesting is those blue bars indicating that more than 50% of this revenue is going to come from disrupted areas, the case which we just discussed. So now the question is, who all are the players involved in this disruption and in this industry? So on the left side of screen, you can see the names of these auto giants like Toyota, BMW, Maruti Suzuki, and below them are their suppliers, tier 1 suppliers, Eaton, Bosch, and many more. On the right side of the screen, you can see companies, emerging players like Waymo, which is backed by Google, and then obviously Tesla. And even Apple's car is no more a secret project. And below these emerging players are these well-known shared mobility players like Ola, Uber, and Bounce. So, if I put it in a very short and dramatic manner, there is a war going on. Yes, between these emerging players and old auto giants, where these emerging players are very aggressive with their strategy and operations, and the old giants are defending their fort. So this is where KPIT comes in, because genesis of all this disruption, CAC case, lies in the software and electronics. And KPIT has a more than a decade of experience in mobility software technologies. It also has a long-standing relationship with these auto OEMs. So KPIT comes in with a value proposition of faster time to market. From the scratch of design to the production, it will help these auto giants, these auto OEMs, to put their new generation vehicles on the road within the shortest possible duration. Now if you look at the business of KPIT, you will find these major domains where KPIT operates in. The powertrain, AD/ADAS, this connectivity, and the other domains like security, diagnostics. So the powertrain is that part of vehicle which actually converts the fuel energy into a mechanized energy and actually rotates the wheel. And if you look at AD/ADAS, which is nothing but automotive driving assistance system, the connectivity includes infotainment. It also includes the connection with the vehicles in the surrounding. And the other domain has a lot of offerings including security, diagnostic, mechatronics, and lot others. Now just to give you an idea about how powertrain looks like, this is an image of electric powertrain, where you can see the major components are those yellow colored battery pack, then we have the electric motor, onboard chargers, and few other components to it. Now if you look at AD/ADAS, it is nothing but a three-part system. On one side we have vision system, sensor system, and the third is the controlling system. This vision system and sensor system actually generates a lot of data about the surrounding of the vehicle. And this data then gets interpreted by artificial intelligence, machine learning, to actually control the driving of the car. Let's talk about the growth prospects of KPIT. The very first chart you can see auto sales are going to grow at just 3% over the next decade. And interestingly, KPIT is going to grow at 11.5%, basically the market size of KPIT. And you know the reason for this, because genesis of the disruptions case is going to be the electronics as well as software. And hence the market size in 2020, which was $238 billion, it is going to grow to 469 USD billion. And you can have a look at the components of from where this growth is coming. The point here that I want to make is the growth prospects of KPIT are very, very strong. And the question is how KPIT is going to attract this growth and outperform the rest of competition. Let's take a deep dive in the strategy of KPIT. They are going to deploy all these strategic levers to attract the growth. The first is PTA, which stands for Platform, Tools and Accelerator. KPIT is investing heavily on innovation. Their R&D spend stands at 5% of annual revenue. And what they are trying to do here is to get an edge in the market by building all these proprietary tools like battery management system, KPIT's own infotainment system that can be readily deployed by auto OEMs to enable the faster time to market of all these new generation vehicles on which these auto OEMs are working on. Second is the early adoption of transformative technologies like artificial intelligence and machine learning. Their third lever, which says zero defect delivery, is very important because all the solutions which KPIT offers are very critical in nature. The vehicles that are actually using this KPIT software are going to be running across the globe, and that is why this zero defect delivery is very important strategy for KPIT. It will also enhance the credibility of KPIT in the market. Their fourth lever is best place to grow. And it is one of the most important, personally that is what I think. Because if you look at the business model of any IT company, you will find their largest investment is towards people. And to operate in a competitive market like KPIT, you have to attract the best of best talent available in the market. And hence KPIT is positioning itself as the best place to grow, personally, professionally and financially. Their next strategy, T25 clients, very interesting. So what KPIT is saying here is they are going to mainly focus on these top 25 customers and not spend their efforts and energies on a lot of small clients. But who are these top 25? These are industry leaders and these are the players who have financial muscle to withstand the volatile period of this market. So what will this entail is if company achieve this T25 strategy, it is going to have a very sustainable top line in the next few years. Their last strategy, which says global, wherein KPIT will build their capabilities across the globe. In fact, they already have operations in areas, in the geographies like India, China, Novi, Munich, Detroit and USA. So these are all the strategic levers which KPIT is deploying to attract the growth and outperform rest of the competition. Let's get into my most favorite part of any company analysis, the financial section. We will cover few financial metrics here to understand the performance of company, and of course we'll start with revenue first. You can see here there are two bars, FY20 and 21. Only 2 years of information is available because this reincarnated KPIT recently got listed on the stock exchanges. And out of these 2 years, FY21, as you know, was hit by pandemic, especially the mobility sector because of their discretionary nature of spend. And despite this, KPIT managed to keep their revenues flat. And if you look at the share from T25 clients, it has increased, and that is a good sign as per KPIT strategy that we just discussed. Now we need to go a bit deeper to understand this top line and have a look at it through different dimensions available. The first dimension is of geography. You can clearly see that KPIT's majority of revenue is coming from USA and Europe, and that is because the mobility disruption has gained momentum in these geographies as compared to rest of world. As other countries catch up the pace, their revenue share is obviously going to go beyond this. The other dimension available is of business verticals, where whopping 76% of revenue is coming from passenger vehicles alone. And I think the good part here is that there is a scope to grow on the commercial vehicle and new mobility side, because their market size is also similar to that kind of passenger vehicles market size. But the really bad point here is that the current dependency on passenger vehicle, which has the risk of volatility because of its discretionary nature of spend. The third dimension available is of domains/practices, and you have a pretty balanced revenue share coming from all the practices that KPIT has, and that's a good sign. Employees. As we discussed, people is the largest investment for any IT company. So we are going to cover three parameters, people related parameters here: employee headcount, revenue per employee, and cost per employee. The current number that KPIT has indicates maybe due to COVID, KPIT had to let go of few employees, and maybe that is the reason for this degrowth that you see in the overall employee headcount. The other two parameters, revenue and the cost per employee, I think they are pretty stable right now. Next is firepower. What I really like about KPIT's financials is their huge war chest. It is a zero debt company, and it also has a great firepower in terms of cash available that can be deployed to acquire new emerging tech companies. It also means that the dividend payout for investors will increase over the period. Key ratios, we have three ratios here: equity multiple, asset turnover, and PAT margin. Since there is only 2 years of information available, there is not much to comment about here. However, I would like to give you an idea about all these ratios that we are covering here, because we will be covering same ratios in future videos as well. So first, equity multiple, it tells you about the financial leverage of company, outside funds that are deployed by the company. Hence, it will be unfavorable or bad if this ratio goes up. On the other side, the other two ratios, PAT margin and asset turnover, these are favorable metrics. That means if they go higher, it will be favorable for company. Let us summarize this detailed analysis here, and let me warn you, this is not buy, hold or sell decision. Instead, I would like to leave you with few positives and negatives that I consider for this company. On positive side, we have this disruption scenario and hence huge growth prospects. KPIT has a strong relationship with auto giants like BMW, Toyotas of the world. It also continuously focuses on innovation and R&D. And obviously it also has a great firepower in terms of cash. On negative side, we have this current dependency on passenger vehicle that brings volatility to the revenue. There is always a threat of new emerging players like new generation tech startups for this market. Also, talent is very critical for KPIT. Hence, it will continue to maintain pressure on the bottom line of this company. So that was my take on this analysis of KPIT. I would really like to know your views in the comment section below. That's an end of our first video in this series. If you want me to unbox more such companies, you know what to do. Do like, share and subscribe. Signing off. See you later.